Okay. Hey everyone. So my name's IntheZone. You guys might have seen me a few places around. And then welcome to the server now, which is great. So this is more for beginners. We have a lot of people who join in at a lot of different places. And when I started my trading journey, I think this is what if somebody would have told me this at that point in time, it would have really helped me. For a lot of the experienced guys who are over here, it might not be as it might not help you as much, but you guys can chime in and tell me what you guys feel and what your experience was, and I think that's going to help the newer people over here that are there. So I'll start with this. None of this is financial advice. This is just education. Everything that we do on this server is education based. Like we don't have the qualifications to do it, or any certification to do it either. So yeah, with that said, let's start. So the first thing, I think the biggest thing that you will realize is that you're stepping into a different world, where most of us have a different job, right? None of us are full-time traders or full-time stock guys, or hedge fund guys, or whatever you want to call it. So we're stepping into a new world. We are amateurs or novices, or infants in this financial world, and I think we need to remember that. I think we step in. This was told me by a very good mentor that we step in from our day jobs, which we might do really really well, and our egos are built accordingly. And when we step into this world, we think we can conquer this as well very easily, and that is not the case. If you do that, it will hurt you really badly. So when you step in, realize your level of expertise every day, every minute that you're trading, every day that you're trading. Realize you've just stepped in, whether it's going to be a day, a week, a month, a year, 10 years, whatever. There's always people who have been trained more than you, who might, some people might be smarter than you, some people might have more resources than you. So always keep that in mind. When I stepped into this, it was about following a lot of different people on social media, and everywhere I looked, it was always about fast money. And where does fast money start from? It starts from options. So the one thing that I realized after losing a little bit of money, or maybe a lot of money, is that fast money is not sustainable money, right? You can't just start a race and expect that you'll make all of that money really, really fast and keep going at that pace. It just cannot happen. Maybe a couple of years down the line, maybe, but most people will tell you this when you start your trading journey, or most honest people will tell you this, that if you're starting your trading journey, fast money is not the way to do it. You don't expect to go into a courtroom and start arguing in front of a seasoned lawyer, like against a seasoned lawyer, and expect to win your court case. You can't expect to go into the hospital and be like, hey, I know everything and I can do this operation. I think kind of the same principle applies over here, that our education is the education that's available is so abysmal and infantile, and it's so hyped up that we kind of forget that. Once you remember all of that, I guess, and you bring your money, your hard-earned money, most likely, right? All of us work really hard in our day jobs and everything. When you bring your money into it, your job is one thing. Like for all the newer traders, or like if you've just started out a year, half a year, more maybe even, your first job is to save your money, right? Nothing more, right? Learning, trading, everything else. Learning comes secondary. You have to save your money to do it. Give the smallest learning tax that you can, right? I gave 5 figures to somebody on Wall Street. I know Moin kind of has kind of a similar journey. I'm sure there might be other people who've had that experience as well. We want you guys to not make those mistakes. Don't make our mistakes. Make your own mistakes, right? Don't make the mistake of blindly going into something. In this case, obviously trading. Don't go blindly into trading, and with big size, big positions, without having a lot of experience and a lot of knowledge. How do you do that? I guess is this in no particular order, to be really honest, but I think this was important for me, is that you need to find a mentor. Books are very nice. Studying is very nice. Looking at patterns is really nice, but having a coach or a mentor or somebody really cuts down the learning curve. And I'm not saying you need to go pay somebody a five-figure sum of money so that they can, or like a six-figure sum of money or whatever, that they can teach you everything, right? You need to find somebody who's consistently trading, who's consistently making money, and somebody who you can watch, and be like, if you need some help, you'd be like, hey, this is what I saw from your trading or whatever, and can you guide me with this, right? It's very difficult to say to somebody that, hey, who's really good at their job. Like, there are a few people who are trading really well. If you look around in the quite a few discords that you guys see, um, there are a lot of discords. There are very few people who you will see will actually post their trades, like actual trades. I'm not saying that, hey, if something touches 1.2, you can, it's a buy range 1.2 to 1.4, and if it goes below 1, kind of stop loss. It's easy to say that, but if somebody isn't able to show you their actual positions and how they took profit or their P&L, there's a good chance that it's a social media, just a social media thing. And you will find, like, I think it wasn't back when I started my journey, like a couple of years back, it wasn't as exposing of simulated traders, like when you're doing sim trading, wasn't as much. I think that has exponentially increased. So if you search around, you will find a lot of people who have been exposed because of that, who have made an eye-watering amount of money from people trading, like people helping people trade, I guess. So find somebody who can genuinely show you, that they're trading actually. And I know it's easier said than done. I really understand that, but you guys are at a good place. With how Moin does his thing, how Smooth does his thing. There are like a lot of other people who actually will show you those things, and will help you get there. But I really do understand that it is easier said than done. The second thing is you have to study. Unfortunately, like any high-paying job anywhere, and this is a job, right? It's not really a business where you can hire somebody to hire somebody's expertise to build a company, and you can do it. They can do it for you. This is kind of a job. You have to sit down yourself to do it. So like any high earning potential, like anything which is high earning potential, requires a lot of knowledge, requires a lot of studying, requires a lot of hard work. If somebody told you otherwise, they lied to you. I am sorry about that. If somebody said that, hey, you can, just I give out these, levels every day, or I provide these trades every day, and you can just follow me and make a lot of money, I am sorry. They did not tell you the right thing, because eventually you will miss something. You will, there will be a point where they had their exit and you did not take that exit. How do you dig yourself out of that hole? Or you missed the entry point, and it's at a different entry point. It might be lower, which might be even better, but you think that hey, this is crashing, instead of thinking that this is at a discount, right? You have to have the knowledge to assess those trades. When I look at my journey over the last 1 year or so, maybe, like really seriously trading, it took me a very long time to find trades. It takes a lot of work for me to find trades. I'll be really honest. I have to review. I review like a lot of charts every day, like a mad person. Absolutely, my wife like absolutely is gonna break my phone one of these days. Like I'm just sitting there at night sometimes, just going over charts. That hey, what's the pattern on this, or how it's been going on the daily chart and the 4-hourly chart, and or something of that sort. It's kind of addicting, but I'm sure I understand where my wife becomes annoyed with it. So finding trades is difficult. I 100% understand that. But understanding a trade that somebody else might provide is not as difficult, right? If they are giving you the baseline parameters of it, you can, and if you can chart, you can go back at a lot of things and assess it yourself. So before you take a trade, try to see if you can actually assess that trade, right? Why are they saying what they're saying? Why are they saying that you can enter at $1 and not and cut it below 0.8, for example? Why are they saying to take profits at 2.5? You should be able to assess all of those things yourself independently. Like if somebody told you, you can go back, take a look. Yeah, it makes sense. Like I could take profit maybe at 1.75 as well and at 2 as well. And like the high part is 2.5. So it makes sense why they want to do it over there. So if somebody can give you a ticker, you can understand that, hey, where can I take profits? Where do I stop myself? Those things I think are essential before you kind of enter into that trade. What really helped me is, apart from reading books and looking at different patterns and charts. In books and everything, chart patterns in books, is actually charting out stuff on Weibo. Like I would draw, like it is horrible the amount of stuff that I go through and I draw. Like you'll go through this, like I will keep going through stuff and I will keep drawing levels and I'll keep changing it on the daily and on the 4 hour or the 1 hour, trying to see what fits, the chart really nicely, what fits most of the levels. But Moin suggested this to me, that he draws these charts every day. I mean, he said it out of like a casual thing, like, yeah, I draw like 10 charts every day. And I was like, what? I was like, how does Moin draw 10 charts a day? That he trades what? Let's put it this way: he trades 250 days a year. He's been trading for 3 years. That's 750 days. He's probably drawn 7,500 charts, and he's still saying to me that, hey, yeah, I draw like 5 or 10 charts a day. And this is in addition to SPY, futures, everything else. So it was fascinating and terrifying at the same time that he still does that. If you guys get, where I'm coming from, it was difficult to understand that, but it really helped me because once you start drawing, you kind of see what kind of a trend it's following as well. And then Weibo has this really nice function where you can actually play, I think, a day out or maybe more. I'm not sure. I played days out, but I'm not sure how much more you can do. So I used to like something like that ran really high, like for example, Truck that ran today, or Nuke that ran or whatever. I would go back and see, how these things ran. Like how did they respect the support levels? Like after drawing it, I would try to avoid the day that we were on, obviously, and go back and draw it and then see how it respected levels, how it responded to it. I kind of learned volume profile to a certain extent just by looking at charts as well, which was, in hindsight, I should have studied first and then started looking at it. It would have cut my learning curve a little bit. But that's helped me in multiple ways, if that makes sense. Before I run ahead after this, before I run more through it, does anybody have any questions up to here? Okay. I would like you to talk about drawing resistance and support lines and how to utilize them for trade, entry, and exits. Okay, on what time? Okay, sure. Can you know what time you use for penny stocks, software bag to make look at what find out, and are these indicators of primary seeds? Okay, so yeah, so great questions, right? In terms of charting, I typically draw most of my penny stocks. I will draw on the daily only. Like the primary thing that I'm going to draw. I was going to draw them on the daily, and I will work back from there. And the only one, I go back to the 4 hourly, and the reason for that is you do not see the spikes in pre-market and after hours if you don't have the 4 hourly, right? If you look at it, if you switch between the daily on, if you see all these spikes which are in pre-market, this spike in pre-market, this one which was at pre-market, after hours, sorry, you will never end up seeing this one which was, after hours. You never see any of these in the daily chart. So that's why I tend to go back into the 4 hourly, and I will look back at the 4 hour as well and see how what I missed basically. Most of the times you will see that most of the chart will um, align with the daily chart as well. But you will see that there are some spikes which are really which you don't really see anywhere else, and those you can chart out. And I sometimes what I would do is I would chart these out. I don't do it now because PWM is something that I remember on the back of my head because I've traded this so much. What I would do is I would change the lines of these. Like I would remember that in my head that these, a dotted line is for pre-market highs. Something hit that high because it's not a very strong, because there's not a lot of volume at that point. It's just one of those things where it hit, came back, and that was the end of it. So that is how I start my thing. I will record like a video, or maybe we can do a separate session where we just do charting. I think charting in itself is going to take a decent amount of time where we can do it. But the crux of it is that you go on the daily chart and you identify where the bars, your daily bars, are sitting at, right? So where did most of these bars happen to be at, right? So I try to draw it usually from right, which is the most recent, to left, because your most recent price action is what anything will follow. You will see penny stocks like this. If you keep on going back, if you start from the left and you go right, you will think that PWM will be, will have a resistance of 31. And that wasn't really a race while back, right? This was in 2023, so a year back, a year and a half maybe. But thinking that PWM is going to somewhere come to 30s is, I have to be, I mean, I am a hopeless romantic, but, hopeless romantic with stocks is a whole different level. So
Better
I
than
always,
that, I have a chance of going to the moon.
yeah, exactly.
Yeah. Usman, can you just hold on 1 second in the zone here? All right. Can I just add something if you don't mind?
Yeah.
When you draw your levels, all right,
Mhm.
two things that you need to keep in mind is first, try to identify the levels from where price pivoted, right? From where price changed direction, move to the other direction. That's
Sure.
the first criteria that you have. Okay. The second thing is, do remember those levels are not lines of stone. Treat
Yeah.
those as lines in sand. Next time price will come exactly there and reverse. That is never going to happen. Okay. It may come near there, slightly up or slightly down, and have a reaction. That is more likely. Okay. That's number one. Number two, the more times price touches a certain place, either as a support or as a resistance, like you can see the 96 cents that he has over here, that was a support before. So that was a resistance before, the 96.6. Then it became a support and price moved on from there. Thereafter, you see the 113. Okay, very similar. It was a resistance before. It came back here. It moved up. Today again, it came back right there, right? So the more times you will see the same level being touched either from the upside or from the downside, that levels become stronger and stronger. Okay, most likely price will react at that level more than a place where price touched just one time.
Thank you, Boyle. I was telling how you still draw like 10 charts a day, which is like 5 or 10 charts a day, which is horrifying and fascinating at the same time. Like you've considering how long you've been trading. Uh, so yeah, so we answered this that what time frames we go at and how far back do you typically look when finding levels. How far back I go to finding levels? It So I don't go horribly far back. I'll be really honest. I will go back to a reasonable level, especially on the daily chart. If I can find if the 200 EMA, this is my 200 EMA. If the 200 EMA is sitting 100% or 200% out, that is kind of like the limit for me where I will draw it. I know we've seen runners which are doing 800% and 900% and 1,000% in a day these days, which is mind-boggling to me. But that is what I generally do. I will go up, 100, 200% of where the price is right now, and draw those levels out. And I think that serves as a very standard stuff for me because I try not to go for stuff which is, like we generally try not to chase it. 'Cause, all these huge runners. So it usually helps me out that way. But you can go, as far back as you would like. If you want to practice, just keep going. Just stay at a realistic price. If something is at 1.13, you generally don't need to go back to, $32 to do it. We'll go up to $5. That's fine. I've never drawn it below above 2.9. I think I've traded PWM about, I don't know, maybe 25 times, or so at least.
How many
Um,
Lambos did it pay for?
I'm coming
You
to that
guys know,
exactly.
right? He drives a
Hmm,
Lamborghini.
hmm.
Yeah,
I'm gonna
we
come.
just need to find out what watch you are.
Yes. So remember we talked about so the primary sorry Nikolai, the primary indicators that I use are the same as what a lot of us use. They are the 9, 20, 60, 200 EMA, as you see over here. Let me expand this a little bit for you.
Can I throw
Uh,
the question back at you, Nikolai? Why do you think we use these common indicators? I use it, he uses it, Smooth uses it, Alpha uses it when you guys say him. Okay, a lot of traders use it. What do you think is the reason? Or anyone else? Why don't you guys pitch in? Let's make it interactive. Come on.
yeah.
Why do you guys think that we use them? There must be a reason, right? It cannot be just I woke up and decided to use it tomorrow.
Yeah, because probably all the other traders are also using the same thing. And
Sorry, Jimmy, what was that?
so all the other traders are using like it's a universal language. So everybody kind of follows that. So it's like a more price bouncing from there. Is that the reason?
That's a very nice answer. Anyone else?
They have proven effective.
Excellent. That's a very nice answer, Al. Okay, who else? Guys, there's nothing wrong. Okay? We are all here to learn from each other. The other, okay, so we got two very good answers. Like Raul mentioned, that these have been back tested by us, fits our trading styles. That's the key thing. Okay. Like the way I trade, whatever indicator I use, I need to make sure that indicator works very well for my trading style. Okay. Like I know Smooth uses volume profile a lot. When he was like having the weekly prep with us yesterday, he was showing off the support and resistance of the volume profiles and how he uses it, right? I don't use volume profile that much in my penny stock trades. Well, exactly. How it fits to your strategy. That's it. Okay, there is absolutely no right indicator, no wrong indicator. What you need to be aware is you know very well how to use that indicator. Just because me or IntheZone uses something doesn't mean you guys have to use it. It might be completely useless in the way you do.
Yeah, that's absolutely correct, right? So you need to, like you said
Sorry,
about,
sorry. Can I
yeah,
hijack your mic for one more second?
yeah, absolutely.
Yeah. Price action is not an indicator. Okay, price action is nothing. It is made to look very complicated and very difficult because otherwise nobody will buy the books in price action or not do a course whereby they teach you price action for 20,000 bucks. All right. Price action is just the movement of price. That's it. Nothing else. PWM went to 2.5. From there, it died, came down to 1.3. That is your price action. Full stop.
That's
Okay.
absolutely
It's
correct.
just the movement of price. That's it. Nothing else.
Yeah,
I
I
can
think
send
it's,
you. Yeah,
sorry, man, go for it.
absolutely. I aspire to be that way. Okay. Like I will just see price and volume on the chart and trade according to that. Honestly, that's my aspiration to be a naked chart trader. But I'm not good enough for that yet. So that's why I use indicators to help me on the direction that I want to trade.
Yeah,
Okay,
so
price action is purely just the movement of price supported by volume. That's it. Smooth, you want to add something or IntheZone, you guys want to add something?
yeah, I'll show you something. We'll continue this on, but I'll tell you something. Like, like I trade, like this is for longer term, right? This is not, I think, yeah. So I'll tell you this, right? Let's forget about the penny stocks that we trade, right? Like penny stocks is one world, right, where things move every day and crash every day, and go from there, right? This is a leverage ETF, which is called FNGU, right? It is basically the FANG stocks, which is 3x leveraged, and it is along with Tesla, and I think one more thing. I don't remember what else is on it. But you will realize that even though people do long-term investing, or like leverage products are generally made for short-term, right? But there are a lot of people who utilize this as a very nice long-term or mid-term investment as well, right? And I am one of those people. And obviously, I got this idea from somebody as well, right? I'm not like that smart that I will get it. So if you look at it, when we call this the 200 EMA, like everybody tells you, even in short-term investing and long-term investing, the 200 EMA is like a magnet. It stuff comes down to it, and then you have to look at price action. Price action is how the price moves, right? If price is moving up, you're in a good state. If price moves down, you're in a bad state. That's price action, right? You want to buy low, you want to sell high, right? You can look at your EMAs, like when FNGU was really nice over here. This is back in this is when I started investing in it, right? It was 156. I started investing in it when this huge nice correction happened, went down. I think I bought it at 146 or something of that sort when it started crossing up, and I kind of rode the trend because I saw that it does this really nicely where it keeps going up on this 60 EMA, and then the minute it started cracking, I kind of sold it. I did not care where it was, what it did. I just followed what somebody had showed me really nicely, that it followed, like when it starts turning down, just sell it, right? Which is really nice. It came back to the 200 EMA. I was like, oh, like the 200 EMA, really nice. Bought it at 250. Kind of started when it started going up. That is when I bought it at 270 or something of that sort, right? Went back really up nicely. It followed the trend, went up really nicely. It went up huge to 550. Now I was a little greedy at that point in time. Didn't realize that I should probably sell. So I sold it on the way back down around 480 or 490, right? So, but it was, if I had followed my really nice EMA, it showed me that all your acute stuff is telling you that it's going down. So you just have to, I think it's EMAs are show you what has already happened, right? EMAs are not predicting the future. They're moving averages, right? What do they show you? The average of whatever you're trying to measure. If you say a moving average 9, it tells you 9 days average of what time frame you're on, of a daily chart, of the last 9 days, of the last 4 hours. If you go on the 4 hourly chart, then 4 hours in 4 hour increments, it will show you the last 9. And the same goes for 20, 60, 200, right? So they tell you what's already is happening. So you have to be the one to interpret that and go from there. If that makes sense. All right, coming back to, what was the other question? Yes, question. Bollinger Bands. Ooh. So how about we're getting, I think, Nicola, you're starting to get into like the more complex stuff. I wanted to keep it like a little more simple. We can definitely do a class or like a recording where we do indicators, how do we follow them, what I use, what some other people use, and then we can go from there, if that makes sense. Awesome. Moin, do you want to add anything else? I don't know when you joined in and when you started listening to my ramble. Moin's probably trading. Okay, so when I talked about the tools that you guys need to do it, one thing that I will suggest is when you find a mentor, like who's really nice, try to see what kind of trader they are. And as you kind of read through it, you'll realize, what kind, because there are different types of traders, even in, for example, if you look at somebody who's swing trading, like I do, or swing trading like Alpha does, or swing trading like the type of swing trades Moin takes, right? These are very different types of swing traders. I am a little greedy. I try to dredge the bottom, absolutely, to make sure that, hey, this is starting to reverse from here. And, that is where I try to generally get in. I try not to time the bottom, but I try to see, hey, something's constantly making a bottom over here. It's starting to kind of curl up a little bit. This is where I would like to enter. Alpha, the way Alpha does it, for example, he is a breakout trader, like something which really needs to have volume. It is already done its nice curve already. If the baseline was 1, it's probably sitting at 2.5. And that is where like the real movement is going to happen in a small amount of time. And that's what he likes to trade, right? So in the subset of day trading, swing trading, there are different types of people doing different things. Realize whether that fits your personality and what you're looking for and what time you have. Don't blindly, start doing something which doesn't fit your need or fit your, patience level, your, um, for lack of a better word, your satisfaction level, I guess. Like I know Moin over here is one of the most satisfied people that I ever know. He will take a 5, 8, 10% trade and be really happy. He will genuinely be happy. I am not that nice. I am not that patient and I'm not that easily satisfied, I guess. And maybe that's because I'm
That's the reason I don't drive a Lambo.
sure. By the way,
Yeah,
I
I
drive a
just make
Honda.
about 80% a day. That's it.
Yeah, but he consistently takes those and he's happy with it. If he doesn't find a good trade
Because it adds
after
up.
10%,
That's it.
yeah, if he doesn't find a good trade after 10%, he will take that 10% and he'll be like, okay, bye bye. Doesn't matter at all. We'll come back tomorrow. We'll come back next week. We'll come back, next month. If something's not there to trade, something does not look right, you should not trade. That takes a lot of, I think, you need to be a great person and you need to have gone through the process, I guess, to have that. So realize
In the
what
zone, can I just hijack you for a second again?
yeah.
I'll draw one example between me and Smooth, right? Look, both of us trade futures. With Smooth, he is a very structure-based trader. Okay, whereas I am a scalper. What I've seen with Smooth is he will wait a whole day, literally patiently waiting till he gets his structure. He will take one trade, a massive trade. He will take $1,000 from the market. He will walk off. Whereas for me, when I scalp futures, I will take 5 trades, taking $100 each time, and I'll be happy with that. Okay, so you got to understand like what fits your strategy or what fits your style, your mindset. Okay, and you trade based off that.
Absolutely. Yeah, that great examples, right? Like whether you choose futures, whether you choose options, whether you choose because options you can swing it in the day, you can swing for weeks, you can swing for leaps, you know, realize what fit because like I said before, we're not professional traders, right? We're not sitting in front of the screen, 95% of the time from 4 o'clock in the morning to 8 o'clock at night. We all have something else that keeps on going on. We all have families. You need to prioritize your time and see what fits your personality and what you can tolerate, right? If you can't sleep with, being down 10%, then know yourself that, you can't do that. I realized very early in my life that my wife is very conservative in terms of, money wise. She spends what she wants to spend, but she's, very conservative in her investment, everything else. I am, on the other hand, a little more, um, challenged, if that's a good word. But I would put it into crypto. I'll put it into other things as well. But she, like, I don't know it. It's not that safe. I won't touch it. So realize who you are before you start spending the money. Next thing, when you start spending your money, we come to position sizing, right? Position sizing is beaten down topic, which I feel everybody feels like they've heard about it, but I feel like a lot of people don't follow it, including me initially. Even though I went through a lot of things and read a lot of videos. When you start out, if you have done, I don't know, if you've done a couple of trades, if you've done 10 trades, 20 trades, 30 trades, if you are not seeing that you're consistently profitable, if you feel like you've lost a lot of money, position sizing is for you is start at the smallest possible that you can. You can buy one, you can buy four, you can buy 10. Like I said before, this is your capital. Your first job is to save it, right? You have to save your own capital. Give the smallest learning tax that you can possibly do, right? Trade everything. Don't be shy of trading something that is running you know, like is 100%, or don't get shy if you want to trade futures. Trade it. Just be responsible with it. You can definitely short if you want to short, right? You want to learn how to short, absolutely do it, but do it with one stock. Why go with something that with your, like, if you're really good at options or you're really good at day trades, and if you have a normal position size of 500, if you're trying to learn a new thing, why go with the same amount? Go with 1% of it or 5% of it or whatever. Just don't give that money away. I think all of us come in with the mindset that we can earn money and earn money fast. And then when we lose money, we're like, oh, this is, everybody says this to each other. Oh, this is just a learning tax, right? Please minimize your learning tax. Do not give your money away, because you guys have worked really, really hard. You guys are giving money on Discord. You guys are giving money to the market. Try not to do that, please. The second thing is that once you start, even if you start getting comfortable, like if you've taken, like, I don't know, like a couple of trades, 50 trades, 100 trades, you feel like, oh yeah, now I can do more than 4, more than 5, 10, 20, whatever. Position sizing, even when you're comfortable with your trading, is a very dynamic thing, right? You can size up, you can size down. Every trade does not have to have the same size. If you look at something and it doesn't look like the perfect setup, which I understand, there are very few perfect setups that you can identify. There's no harm in going 1/5 of your size, half your size, whatever you like, right? Whatever you feel comfortable with it, it's okay to do that. I was talking to Smoove and Moin about this, right? Like 2 days back when SPY went down 3%. The next day, when most of us traded, we had all sized down significantly than what we usually trade. Like we weren't trading. I wasn't trading with. I'll be really honest. I'd still trade with $300 to $300 to $500, somewhere in between there, right? Because I've given a lot of money back to the market before. I realized that I did not want to do that. I wanted to sleep well at night. So I started out with the strategy of trading only 4 stocks with a $10 limit. I could only buy, if something was $5, I could only buy 2. If something was $1, I could only buy 4. It didn't matter. Like, both those limits stayed in place. So I did that for about 15, 20 trades. Then I doubled my thing for the next 25 trades almost, till I was at 50 or I don't know, 60 or 70, something of that sort. And then I increased to 50 and then to 100. And for each of these, I did between 25 and 50 trades. And, you can call me dumb and you can call me, I'm not that smart, I guess. So I took my time in doing those trades and going small. And even though you might see, I might post some, gains every once in a while here and there, that, this hit like, I don't know, 30% or 40%. It's really nice to have that, but that does not make me change my position size. I don't say that, hey, I made 2 trades, which have done 30%, or whatever. If I would have sized up to 1,000, I would have made $300 instead of, right now I made, whatever, $100 or $80 right now. It does not matter. What matters is your percentage gain, and your comfort level and your education level. If you feel, I've been asking Moin about this, like over the last couple of months as well, actually, of how do I convince myself to increase position size. And I've talked to a few other people who trade with like massive sizes compared to mine. And everybody says the same thing to me, surprisingly enough. They say that, you will realize when you are comfortable. You will realize, oh, you increase from 300 to 400, 400 to 500, 500 to 750. If you can swing those trades and sleep happily at night, that, you're like, you were tolerating a 10% loss, for example, like I can sleep if I'm 10% or 15% or even, 30% down in a position. I can sleep with that, right? But I couldn't sleep with that. Like I tried increasing my size to 750 or 800, I remember, and I was down 20% or something, and it really woke me up. Like a couple of times, is it 4 o'clock yet? Can I come take a look at it? What happened about it? I kind of realized that, hey, not there yet. So I sized back down. It's okay to do that. I think the best people in the world, even when they're trading with the biggest size up and size down compared to what trade it is, compared to how good the market is looking. So try to follow that. If somebody tells you that, hey, starts, you can, or whatever your trading size is right now, if you feel that a trade is not that great, don't get uncomfortable. Be very comfortable with your trading. You should not be losing sleep. Your mood should not change with, you losing out. Yes, you are sad. I understand it. But, there's a proportionate response to most of these things. So keep that in mind.
In the zone, can I step in here for a second?
Yeah.
Just to answer Nikolai's question here. Question was, is there any backtesting or custom strategies slash indicators for TradingView that I guess we can suggest to him? There is no magic strategy or indicator that's gonna make you a bunch of money. Anybody who's selling that, I wouldn't believe them, right? Uh, the most effective way to trade is to develop your own personal strategy, whether that means looking into an indicator, studying it, see if it can apply to you, or looking up a strategy, learning the fundamentals of it, and then trying to apply that to yourself as well, because no one strategy will work for anybody else, right? um for me personally, I like to trade volume and price action. This may not work on certain stocks. For example, off the top of my head, PayPal, right? There's not enough volume going in and out of PayPal on a daily basis for me to have repeated daily success on it, right? I might have some good trades on it, I may have some bad trades on it, but there's not enough volume for that to benefit the style and the strategy that I use when I trade, right? So to simply answer your question, there's no perfect, there's no best, there's no better than this person's strategy that will work for you, because everyone's tolerance is different, right? So the amount of risk that I'm willing to take, the amount of losses that I'm willing to take before price ultimately hopefully gets to the price that I'm expecting it to, right? Some people will trade, for example, options, and myself, I, depending on my position sizing, 30 to 40% down is okay for me, right? Because of whatever position that I'm in, depending on the strike price that I'm at. But someone else who may be sizing in much larger on a strike price that's different than mine, 5% down is enough for them to get out, right? And their 5% could be 5,000 and my 40% could only be $30, right? And it really depends on your strategy, the way you go into the market, understanding what strike prices and so on. And all of this comes from, like, you know, keep engaging in the market, keep learning, and find that mentorship that IntheZone was talking about. But yeah, just wanted to comment on that part.
Yeah, it doesn't even have to be a mentor. You find a friend. Like, it. I mean, it kind of comes out of the mentorship because they're probably more experienced and they're teaching you. But you need to find a friend, who knows more than you. Always sit with people in life. I think I learned it the hard way, sorry, I learned it really fast. That hang out with people who are smarter than you in everything, and your life will become a lot more easy because if you are willing to learn, most people will also teach you. So find that pal, like that trading pal who knows more than you, and learn from it, and learn from everybody that you can. Okay, so after position sizing, I guess the next thing comes is risk tolerance, and this is probably the most complex, I guess, question, and the most personal question, I guess, that comes as well to it as to your risk tolerance, right? This because we're doing this session more for we're doing this session more for beginners as people who starting out. I think if you are on your beginning journey where you're in your first, second, third, fourth, fifth month of trading, and you are not you've taken big losses, or you're not profitable, whatever way you want to cut the bread. Um, Try to have your risk tolerance smaller than your profit taking. It does not matter, how fast up or down the stock is moving. I would try to keep a small risk tolerance. It I talked to a few people when I initially joined, like a few discords. Like, I think I joined two discords or three, I think, and the third one was alpha, which was really nice. And because there are a lot of people who were here, and a lot of people pointed this out to me, that if you are in your beginning part of your swing trading, have a consistent stop loss if you can. It is very difficult to, when you are in the beginning stages of your career, to identify where your stop loss would be if nobody has given it to you. Like, I know there are a lot of people who now give it to you, right? Like, this is my trade. Like when Moin puts it out, or I put it out, or like other people like Alpha puts it out, he will have a stop loss over there. But his stop loss is based on his risk tolerance and what he sees in that trade, right? He can average down, he averages down, with big amounts and big volumes. Can you do that? That is why I said before as well, like the people you are following, you have to know what type they're trading, what size they're trading, what their risk tolerance is. So you need to know your mentor as to what they're doing. You can't blindly follow a mentor either. So try to figure out, what your risk tolerance is. I realized that when I was swing trading, I did not want to have more than initially when I wanted to be consistently green, I guess is right. I would not take more than a 5% risk on anything. I did a lot of trades with other people. They would put in their own stop losses based on support levels. They would do it on a lot of other things. And that was fine. I kind of started to understand why they put it over there, but I would generally not take between a 3 to 5% loss. I would be happy to keep following the trade if it bounces off your support level, because if your support level was 15% down, I don't really want to go 15% down, right? I'm happy to stay at 3%, take the 3% loss or 4% loss, keep following the trade, see where it starts to reverse, buy in again. Nobody stops you from buying in again, right? It's just your, you have to follow that trade, right? You are responsible for every trade that you take. Nobody is going to come in and use your money to trade it for you. So, yeah, so you have to do it yourself. So lose small is the name of the game, right? Like you have to lose small and you have to win big consistently. That's what makes you green. If you lose small and you win big, your P&L would be green, and that's what starts making you money, right? So I think that worked really well for me. Is that I would keep following one trade only, even if it took more time. I would take a 3% loss, generally a 3 or 4% loss. I wouldn't even go up to 5%, and I would let it go. It's fine. If I lost that money, it's okay. It got me to the place where I knew that I will lose money in the market. Please realize that everyone will lose money in the market. The best traders lose money in the market. And if somebody tells you that they do not lose money, they are lying to you. Because everybody in this world loses money. Like the best traders in the world lose money, algos lose money, quantifiably everybody loses money. Quants lose money, things go sideways, things change. So it got me into the habit that, yes, I can lose money. I'm not, really smart or really great. I will have to take that. The second thing on the opposite side of it is taking profits, right? When I started out, I had a lot of red, mild reds, I guess, when I started swing trading. The greens were decently big, but I was kind of really balancing it out. I never really became really green. I was always partially red, a little bit green, somewhere in the middle, right? So I realized I had to change something. So what I did was, when I sized down on my positions, when I was doing 4, 5, 6 stocks or whatever, I would consistently take profits at 5 or 10%. It did not matter if the position ran 100%. Yes, you cry, when you see it run 100%, but the best solution that I found was to walk away. Walk away after you take that 10% profit. Don't look at your screen. Don't look at the charts. It's okay. You are trying to educate yourself. The first part where you start taking trades is not to make money. The first year is to learn and learn and learn and learn. I mean, I know some people, if you have the luxury of sitting in front of the screen and taking, 2 or 3 trades a day, or following 8 trades a day and studying them really well for the next 5 months, yes, you can cut your curve down by a lot. I did not have that luxury. I still do not have that luxury. I try to spend time a lot of different places. So I could only do an X amount, right? So what I would try to do is take that trade, take my 8% gain after the 3% negative, red maybe, and I used to walk away. And I did that consistently. And yes, there are difficult days where you see somebody making, you will see a lot of people making a lot of money, in the thousands, 10,000s, 100,000, right? $100,000 or whatever. And you think you were smart enough to do that, and you aren't doing it right now, but it will come. I can assure you, it will come. Because now I didn't think that was possible, but now I truly believe that if you stay on this path, I know I can become somewhat decent. Now that I see where I'm going. Most likely I will get slapped in the next couple of days and start thinking that. But till then, I will keep on thinking that. So that's the other thing, right? Lose small and win bigger than that. That's your only game. The big wins come. They always do. I can promise you, they will always come. You will realize something that you are now able to follow trades really well. You're able to follow the price action really well. You don't get nervous with the EMAs, like when something is on the 1 minute chart, when something is dipping down below the 9 EMA or the 20 EMA. You don't get nervous now. You actually go like, oh yeah, I can actually follow this. I used to panic sell when something used to start dipping below the 9 EMA. The candle hadn't even closed. This is a 1 minute candle, by the way. The 1 minute candle didn't even close, and I used to start panicking and be like, oh my God, I think I need to sell this. So, those emotions start to go out a little bit. And anytime you start to feel really nervous, you'll kind of realize that, this trade is out of your comfort zone, and you need to figure out what part of your trade, whether it's the size, whether it's your risk tolerance, what is it that is making you uncomfortable, or whatever you want to call it. All right. And the last thing that I have to say is, and this everybody says over here, you'll keep on hearing about this. Have a plan before you go into a trade. It does not matter whose trade it is. It does not matter where you got the idea from. It doesn't matter if you're trading something as simple as, like anything. Like, if you're trading something that is just, like SPY, or, when I say, hey, trade PWM, just buy it over here and, sell it for 5%, whatever. Have a game plan before you go in. It seems very easy to hear that, but it is very difficult to actually have that in your head and follow it as well, right? I did this to myself. I'm somebody who learns, I guess, a little bit by writing stuff and everything and learning stuff. So when I used to take a trade, I used to make a plan for myself. Hey, you going into Alpha's trade for example, RAPT, whatever. This is my entry price where I want to be. This is where I'm going to take this is what the price is right now. I want to enter over here. This is my 3% where I'm going to stop. This is my 5% where I'm going to take a profit, and that is how this is my plan, what it's going to be. I've drawn my chart already and everything. Have a plan when you go into a trade. Please do not go into trades without having your own plan. I understand somebody might have their plan, they might have given their stop losses, they might have given their profit targets, but what stage are you at? You are not at Moin stage, my stage, Ronnie stage, Alpha stage, whatever you want to call it, right? You're not at any of those stages. You're at your own stage. You might be somewhere in the middle of, all of us, or, you might be really close to, the bigger traders or something, right? So follow your own plan really, really well, but have that before you go in. Do not go in, you know, without thinking of everything. Hey, this looks really nice. It's going up. Just go into it. That's all. Don't do that, please. Alrighty, I think that's the end of my ramble, I think. Anybody have any questions?
I just want to say thank you. This was a great call.
Always right.
And yes, do not get at my stage. I'm not there yet. You're you're a much better trader than I am, and I appreciate your time just going over this with us.
No, you're most welcome. I think everybody wants some dinner. Does everybody want dinner? I really would like some dinner. Yes. So, guys, if you have any questions, any concerns, you guys want to review a trade, you guys want to shout out a chart, throw those questions out in the general tag me, tag Moen, tag Smooth, anybody you want. Tag us, but throw out your thought process with it, right? Don't say, like, can we look at Walmart, right? That doesn't have a beginning, that doesn't have an end, that doesn't have a middle, right? That has nothing to it. So for me, like, when you want to look at something, tell us what you guys are looking to do with it, because different things, different tickers can go different ways. You can trade in a lot of different ways. So try to make your plan and show that you have a plan of what you're trying to do. We're happy to go over it. Like it's easy to go over a chart with all of you guys. It's fine, but what you want to do with that chart is a whole different question. So, if you, and even if you guys are stuck in a trade, right, throw those out. I understand it's difficult to throw those trades out because, like, I'm stuck in a trade or two, and I discussed that with somebody. I don't like throwing that out in a open forum. When you're losing, DM us. It's fine to do that. We will try to get back to you guys as soon as possible. We can make a plan together, something of that sort, and go from there. It's okay to do that. We'll give you our, take on it, what I would do, where I would exit, what I would want, and you can tell you can be like, hey, I really don't want to sell this for an 80% loss, and we can be like, we can go over it, what we can go from there, if that makes sense.
I had something similar happen to me like that, where I got into NVIDIA today on the 1 minute and then watching it on the 5, and it started going opposite. So I averaged down and then I just felt stuck. I ended up selling for a loss. So that is something I'll screenshot and send it to one of you guys. Maybe probably help me out, explain what I could have done differently.
Sure, absolutely. Yeah, those are things that we on the midweek review, when, for example, when Moin does it or other people do it, and
Right.
in general, ask those questions, because if
Go
you
ahead,
don't,
Ral. Send it to me.
Yeah,
Send it to
and
me.
Okay.
I'll get back to you in an hour.
and
Okay,
Okay.
send me
Thank
the
you so much.
exact
I
timings of the
appreciate it.
trade along with the chart. Okay,
Right.
and try to explain what you saw, what you made you to enter
Yes.
and exit. I will get back to you. Don't
and
worry
as
about it.
as well as on the server, there's a section called trade review. You essentially can
Yeah, I,
create
I put
your
it
own
I put it
channel.
on there today actually. I put it on there,
Okay.
but yeah, but he hasn't got back to it, but I'll send it to Moy real quick. So yeah, I kind of took a
No
hit. I was
worries.
like, man, I'm wondering if I
Yeah,
could have did something different. Thank you.
send it across. Okay, I'll get back to you in about an hour because
Okay.
after I finish, I have to shovel snow now. About a feet only. Okay, then I'll get back again.
All right, thank you.
Yeah.
awesome, guys. This was great. Anybody have any
And
questions?
I'll request one more thing from all of you. That is like, our objective, why we started it, right? That to help all of us to get and build up as traders. What I'll request is like prior to these sessions, when we send out notifications or when these sessions are, if you could send in your questions to the host, it's much better for us to get more prepared, come prepared for the sessions to exactly address like what you're looking to get from that session.
Head uh and the live Uzman, can you go into a chart and just pull up like I guess an options ladder for, let's say, let's go to SPY just to keep it normal, just to answer a question in the chat, and just pull up the options. Or
On this is horribly.
go under options. There's a tab on next to comments. There you go. Okay, so in the money, there's in the money, there's at the money, and there's out of the money. In the money and at the money are essentially the same thing but slightly different. So currently price is at 595. So at the money would be strike prices of 594. In the money would be 93, 92, 91, and so on. Out of the money would be calls that are 95, 96, 97, 98. So at the money is the current price of the stock. In the money is whatever price is below it, and out of the money is the price above it. As far as for puts, it's the opposite, right? So in the money, so go into puts. Yeah, so in the money would be prices like 5 9 at, well, in the money, a put at the money puts are 594. In the money puts are 593, 592, 591. Out of the money puts are going to be your 595 and 596, 597, and so on and so forth. That's the difference between at the money and in the money.
Alrighty, guys. I think we can call it a day, Smooth. Thank you.